Oh yeah, I hear you.
All right, good stuff. Sounds good. Sounds good. All right, so let's get started. So everyone, 1 second, make sure I mute everyone. All right. So the state of the market, everybody. January 2025. It's a new year, right? New year, right? We say new opportunities, so on and so on, right? I truly want everyone to understand. Now it's January 2025, everybody. The most important day of January 2025 is December 31st, 2025. Okay, that's the most important day. And the reason why I say this is the most important day, everyone, because I want you to understand that after when December 31st comes around, you want to make sure that your account is in green. So right now you're starting off January 2025 trading. The goal is to make sure that your account is green by December 31st. That's the goal. Okay, and then the following year in 2026, the exact same goal, and the following year in 2027 is the exact same goal. So I do not want you to get so caught up and so locked in on I have to make this happen today. Okay, if you have a bad day today, don't try to get it all back tomorrow. Why is that? Because the most important day is December 31st. So if you have a bad day today, say, listen, I can get it back over the course of time. Okay? A lot of people, what happened is they're coming to the market with goals. And then once it gets to the point where their goal is not being met, they will either quit or they will start doing crazy things that will knock them off the boat. Okay? We do not want to do the crazy things that's going to knock us off the boat. If you get down $1,000, say, okay, how can I get this $1,000 back over the course of time? Not how can I get this $1,000 back tonight. That will not be beneficial to you. Okay? All right? Also, I want you to understand, everybody, right now, and we're going to talk about this today, everybody, right now, this is a blessing. Okay, right now, when I'm saying this is a blessing, everyone, the state of the market at this very moment is a blessing. Okay, it's a blessing. This is the thing that we've been asking for. I've been asking for what's going on right now since September of last year. Okay, and it's happening right now as we speak. Okay, so I want you to understand right now is a moment in the market, and you all probably, if you've been with me for some time, you probably always hear me say, listen, the time to buy is when you start watching the news and what the news is saying. The news is probably saying, hey, this is the market is falling down 5 days straight. They think inflation is going to fly back up. They think this is going to happen. They think this is going to happen. This is going to happen. All of these scary things are about to happen in the market. Everybody, that's the opportunity for you to get in and say, okay, let's go. All right, say let's go. Okay, so what I want to do today is I want to kind of break down January 4th, 2025, kind of show you some things that happened the past 30 days and what are some expectations for the future. And we're going to break down SPY and QQQ and kind of look at those two things and say where do we think the market is heading. Okay, sounds good? Sounds good. So just for old time's sakes, everybody, if you feel good and you're ready, put a CYC in the chat. Put a CYC in the chat. Yes, you do, Miss Michelle Williams. You do get bonuses for referrals. I pay out a 50% referral bonus for anyone that joins the mastermind that you invite to the mastermind. And you can just send us an email to admin@iwantknowledge.com and we will take care of you. There go the CYCs. I love it. 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 Okay. All right. So everybody, let's get started. Okay. Let's get started. Let's get started. Let's get started. Let me make sure my screen is good and we are straight to go. All right. Perfect. Here we are. Okay. Beautiful. There we go. All right. And let me know once you can see my screen, everybody, because my system is running a tad bit slow, it feels like, and I do not know why. All right. Can everyone see my screen now? And if you can, what do you see? What actually? Why? Let me see. Yep, perfect, beautiful. All right. I think we're almost there. Okay, I got my chat box here. All right, I think I'm good now. Okay, I'm good. All right, so everyone, what we're about to go over, I call it the Options 101 State of the Market for January 2025. We do this on a monthly basis. We kind of just break down the state of the market and look where we believe the stock is actually, or where the market is potentially going over the next few months, the next couple days, okay? Also, everyone, one thing I'm going to tell you, and I'm going to break it down to say it later on this evening. Everybody, right now is the time where you start buying 3 to 6 to 8 to 9 to 12 month contracts. Just put that bug in your ear, okay? You will make more money in this moment with longer expiration dates, okay? You will make more money in this market at this moment with longer expiration dates, okay? Just remember I said that, okay? Just remember that I said this, okay? All right, so now everyone, what has been going on in this market, okay? So over the last 60 days or so, of course we understand and we know what has happened. Trump has become the president of the United States of America again, okay? So when Trump became president, the night that he actually won, on election day, the night that he won, the stock market jumped and went crazy, okay? Literally jumped and went crazy, right here where I'm circled in the yellow. That's the this first yellow right here. This is when Trump actually, was the day of the election, was that November 6th, November 7th, something like that? The election happened right here, okay? Soon as it was declared that he won, the stock market did an amazing jump up. What does that tell us? The market did this. Boom. Ran all the way up here, pulled back some, came all the way back up here. Voila. And now it broke 600, went all the way to 609. Everybody went all the way to 609. The stock market ran from 570 to 609 off of Trump becoming the president of the United States of America. Okay? So that's one thing that happened over the course of the past 60 days. Now, one of the things that's scary, or one of the things that's something to pay attention to, the market rallied over the course of almost 30 to 45 days from 570. This is SPY, SPY. Okay, everybody know when I talk about the market, I'm always referring to SPY. So the stock market rallied from 570 to 609. Okay, finally broke 600. All-time high, something that's never happened before. But something happened closer to the middle of December, everybody. The middle of December, something happened. Take a look at what happened, everybody. Right here, where I'm circling it right here, is where the market shot up off of Trump winning. Pulled back, shot up. It had a 5% increase. It pushed up by 5%. Okay? Now when we come here to December, the middle of December to current day, the market has pulled back almost 5%. Interesting, right? So everything that was gained from November 6th, November 7th, the market has taken it all back. It's very, very interesting to understand, why did the market give it all back, everybody? These are the questions we now have to ask ourselves. Okay? These are the questions that we have to ask ourselves. There could be multiple reasons, right? We can't just pick out one reason. It could be multiple reasons, right? But it's interesting to know something. It's interesting to know that right here, a month ago, the market was excited and pushed up. Now, the market has pulled back. The question is why, right? Why is that, okay? So what I'm going to do is I'm going to give you a couple reasons why we believe the market has potentially pulled back 5%. Okay? Now, before I even go there, I want to run something by you again. If at one point right? The market was right here at this 570 area. And it shot all the way up here to 609. To 609. Everybody, let me ask you a question. When the market starts to head back up, where do you think the market is potentially going? Everybody put in the chat. If the market started at 570 and we pulled back close to 570, and when the market goes back up, where do we think the market is going? Good stuff. Good stuff. Good stuff. If it goes back up, we think the market is going straight back to 609. Everybody, this run right here from election day to up to here to the middle of December for 609, everybody, that could change your life. That run could change your life. So if we have the understanding that if the market goes back up, we're going back to 609. And if we have the understanding that if it goes back up, it can change our life. If you believe the market is going up, everybody, these are opportunity to buy into your positions and buy 6 to 8 to 9 to 12 month contracts and sit and wait for this market to explode back up to 609. Okay? Back up to 609. All right? I'm gonna get deeper into it later on, okay? All right. So, that's what happened. 5% push up, 5% push down. Now the question is this: what really happened? What do we think happened, everybody? Let me break something down to you. Trump came into office, everybody was excited, then Trump started to talk. Okay? Then he started to talk. And when he started to talk, everybody, he started talking about these tariffs. Okay? He started talking about tariffs. Basically what a tariff is put a tax on foreign goods. It's in the foreign trade, it put a tax on it. Okay? So if you put a tax on foreign goods, people equal tax on foreign goods equals higher inflation. Okay, remember the reason why the market fell down a year and a half ago was because inflation, the rates were being raised and inflation was going higher. So if we believe, or if the market believes that tariffs will make higher inflation, and higher inflation equals potential higher rates. So if rates goes back up, stock market does what? Goes back down. This is one of the fears this is the major fear that is happening right now. So let me say that again. If there's a tariff put on foreign trade, that means inflation should potentially go up. If inflation goes up, now the market is fearful that Jerome Powell and the Fed will do what? They will raise rates again. Okay? At the beginning of this year, the expectation, or I guess you say the end of last year, the expectation for 2025 was that the Feds were going to continue to cut rates. Okay? They're going to continue to cut rates. But now, the expectation is this. I don't know. We have to wait until Trump comes into office, see what's going on with the foreign trade. Okay? If the foreign trade is a no-go and it's not going to affect anything, this stock market will potentially do what? Go back crazy to the upside. Okay? But with that fear, remember the market is very sensitive. Okay? But with that fear of the unknown, of knowing what's going to happen with the foreign trade, not knowing if inflation will go back up, not knowing if interest rates will go back up, the market is starting to do what? The market is starting to sell off. And it's ironic that it went where? Right back to where the market was before Trump came into the office. Okay? Everybody with me? If you're with me so far, put a 1 in the chat. Want to make sure if you're with me, put a 1 in the chat. Put a 1 in the chat if you're with me. Want to make sure you guys follow me. If you follow me, put a 1 in the chat. Good stuff, good stuff, good stuff, good stuff. So now everybody, especially all my traders and my investors, while you're sitting around, while you're doing your research, now I want you to be listening to anything that's related to foreign trade. Listen to it. Anything that's related to Trump's policies his first 100 days, listen to it. Okay? Because that's where the answer to your question is about interest rates going up, and so on and so on. Okay? All right? So this right here are minutes from the FOMC meeting that just happened, 2 weeks ago? They released their meetings, they released their minutes about last week, I believe. And this is what some of the individuals stated about their thoughts, right? It says all the participants judged that uncertainty about the scope, timing, and economic effects of potential changes in policies affecting foreign trade and immigration was elevated. So now the Feds just told us in this one statement, the Feds told us that, listen, they really not sure what's about to happen with these changes in policies. Okay? So we're kind of like, I don't know yet. What's going to happen? So when the market reads this, they see that the Federal Reserve is rocky. They're on the fence and they're being cautious. What does that tell the market to do? The exact same thing. It tells the market to take these profits, put it in my pocket. We had a great run. If this run is over, I want to make sure I take profits and be happy. Okay? You follow me? All right. Good stuff. So that's potentially one of the reasons why we're pushing down at that rate. Okay? All right. Somebody said, Ms. Marilyn Smith said it sound like we need another Boston Tea Party. So that's one of the reasons why, everybody, the market is very, very fearful. Now, this is how we understand if the market is fearful or not. Okay. So right here, the VIX, VIX. Okay. We can see that the VIX spiked up and went crazy. Okay. At one point in time, right here around December the 16th, when everything was going well. Who's that writing on my screen? Stop writing on my screen. Who's that writing on my screen? Someone's writing on my screen. Stop writing on my screen. Let me be clear. There we go. Okay. So right here, everybody, on the 16th of December, everything was all good. Everybody was rolling. We was pretty good. We was sitting at a good place. Everybody's making some good money. Next thing you know, boom, the VIX pushed up. The VIX pushed up. Everybody, if you don't know what the VIX is, it's the volatility index. If the VIX goes up to higher numbers, that means there's fear in the market. Okay? So when the VIX goes up, everybody, the market goes down. Okay? So when the VIX, VIX, goes up, the market goes down. Okay? So you can see on one day, December the 16th or December the 17th, the VIX was around $15. The very next day, the VIX went all the way to 28. It was at $28, everybody. The market had a crazy, nasty fall down when the VIX shot up. Okay? I believe the market almost fell down about 10, SPX went down like $100 almost. Okay? And then you can see the fear kind of went away for a few days. It fell back down here to this $13 level. And as you can see right now, everybody, look what's happening. It's slowly starting to creep back up. And now we're back up here to $23. The VIX is right around that $21, $22 mark. Okay? All right? All right, so that's where we are right now. It's fear in the market. The VIX is telling us it's fear in the market. The Feds are telling us to be a little fearful because they don't know what's going to happen with the policies. And basically, the Feds are basically telling us the policies are going to tell us which way this market is potentially going to go. Okay? All right? So that's the VIX, everybody. So if you do not know what the VIX, if you're not sure what the VIX is, everybody, the VIX is the volatility index. And what it does is it shows you the fear in the market. Higher numbers, anything above 20 is extreme fear. When you're hanging around that $13, $14, $15 range, you're pretty good. You're in a pretty good place. The market is probably teetering up and running up, right? If we get down to 12 and 10, 11, not really probably go down to 10, but like 11 and 12, that means the market's on an upward trend. When we get to that 16, 17, 18 range, it's like, Okay, what's going on? The market's kind of fearful. Okay? All right. Let's keep going. 1 second. There we go. All right. Now, 10-year yield, everybody. Everything that I'm showing you right now, everybody, it's telling us the exact same story. Okay, it's telling us the exact same story. The 10-year yield, if you ever want to look at the 10-year yield, that's the TNX. You can type in TNX, you can see the 10-year yield. Okay, the 10-year yield is also telling us that there's fear in the market. There's fear in the market. What do you mean, Chris? There's fear in the market. Listen very, very close. Okay, the last time the VIX, not the VIX, but the TNX 10-year yields pushed up here. 1 second. Pushed up here was in October. Around like October 5th. Okay? So when the yield goes up, majority of the time, stocks goes down. So when the VIX goes up, stocks goes down. 10-year yield goes up, stocks goes down. Okay? Goes down. Right now, current day, the VIX is working itself up to its next level of resistance, everybody. Resistance. Listen to me close. The 10-year yield is working itself up to the next level of resistance. In the chat, answer this question in the chat. The last time the stock came to this level of, not the stock, but this 10-year yield came to the level of resistance, what did it do? Did it break through or did it reject? Put in the chat. Did it break through or did it reject? It rejected. It rejected that level. So now we're coming close to a level of, it's actually a supply, it's a supply zone and a level of resistance. Okay? So what does that mean for us? When we see a particular play, or we see the charts is going to a supply zone or going to a strong level of resistance, what does that mean for us? It's about to hit the ceiling, and when you potentially hit the ceiling, it's a strong possibility you will do what? Fall back down. The last time it came to this $5 mark, what did it do? It sat there for a couple days, then it fell all the way down here to the 3.7 mark. Strong fall down. Strong fall down. Now everybody, if the yields fall down, what do you think the market is doing? The market is going up. Okay? The market is going up. So if the yield is coming to this level of resistance and the current market is currently falling down, and you want to gauge when is the best opportunity to get in to my trades for a 3 to 6 to 8 to 9 month, 12 month swing trade, what do you think you should potentially be looking at as an example? You should keep your eye on this 10-year yield, TNX. As it get closer and closer to this resistance area, we may be getting closer and closer to the bottom where the market is going to bounce and start going back up. Are you following me, everybody? Put a 1 in the chat if you follow. I want to make sure you're following. If you're following what I'm saying, put a 1 in the chat. Okay? Because what we always want to find out is this. Whenever we're trading, we always want to find out, okay, where is the bottom? Whenever the market is falling, we always say, where's the bottom? Where's the bottom? Is this the right time to get in? Is this the right time to get in? Yay or nay? Yay or nay? Yay or nay? Right? Now, the hardest thing to do is to find the bottom or anticipate the bottom. You cannot do it. Okay? It's pretty hard to anticipate the bottom. Right? But what you can do is you can look at other factors, i.e. the 10-year yield, and see the 10-year yield is coming to a level of resistance. The last time it was at this level of resistance, it fell down. So when we come to this level of resistance, if we come to this level of resistance, right, and we reject, it's a strong possibility that, hey, it's time to go up. So personally, if I'm right now, if I see we come to this 10-year yield, I'm going to start, well, not necessarily start, but I'm going to buy in more contracts in my positions. Okay? And looking for the bounce back up to all-time highs. Okay? Sounds good, everybody? All right, let's keep going. Now, this is the state of the market. Now, everybody, good news. All right? We talk about a lot of bad news just now, right? Let's talk about some good news, everybody. So, everybody, it's this thing called the rule of the first 5 days, everybody. The rule of the first 5 days. I think that was the daily time frame, Arlene. I think I was looking on the daily time frame on a 10-year year. I think that was the daily time frame. Yes, 1 year, 1 day. Okay, so it's this thing called the rule of the first 5 days. And what this rule is, this rule basically states that if the first 5 days of the year closes higher than the last day of the previous year, then there's a strong possibility that the stock market will be positive the next year. Okay? So basically, the rule of the first 5 days says, if in 2025, the first 5 days of 2025 closes higher than the close of December 31st of 2024, there's a strong possibility that the stock market will be higher in 2025. Okay? So, in 2025, that meant SPY, S&P 500, well, not necessarily SPY, but S&P 500 needed to close above $5,881.63 on January 8th, Wednesday, January 8th. Okay? Great news. Okay? Great news. We closed above $5,881.63. Okay? On January 8th. So, the data, everybody understands I love data. I love the data. I love to see what the data talks about, right? I love historical data. It tells you a lot about the stock market. Okay? So the data tells us if this happens, if we close above this level on the first 5 days of the market, it tells us something. Okay? Look very, very close, everybody. Look very, very close. Okay? So right here, everybody, look right here, the first red box. It says the first 5 days of January is greater than 0%. Okay? There's historically a 13% return in the stock market. A 13% return in the stock market. Okay? And if you come down here, that's 82% of the time. That's 82% of the time. Okay? Let me say that one more time so you can understand what I'm saying. Okay? Let's say it again. If, once again, the first 5 day rule, right? If the stock market closes above the first 5 days on that 5th day, if it closes above the last day, the closing price on the last day of December 31st, 2024, that means 82% of the time, and I love those odds too, Miss Murray. I love those odds too. 82% of the time, there's a plus 13% increase in the stock market that current next year. Okay? So right now with the data, and this is since, everybody, look how far back this goes, right? This goes all the way back to 1950. Okay? And this is if the prior year had a 10% increase. Our prior year had a 20% increase. In 2024, there's a 23% increase. Okay? All right? So now in our minds, everybody, what I want you to think about, in our mind, right? we see the market is falling down. The market is falling down. Everybody's scared right now. But historically, right now, we have an 82% chance that the stock market is going to close 13% higher. Okay? Now, if in the first 5 days, if the stock market closes beneath that number of that 8,000, something like that, I want to say, or whatever the last day of 2024, there's a 3% increase. Okay, so we don't have to worry about that because we closed above it, and that was 54% of the time. Okay, so we don't have to worry about that because we closed above it. So right now we're looking at a 13% increase. Okay, 13% increase, 82% of the time, and I love those odds. Okay, I love those odds, so I'm not mad at those odds at all. Okay, now let's keep going through this data. Now follow what I'm building up for you right now. Okay, I'm building something for you right now. Now, if you've been here for a while, you've seen this. We brought this chart out back in this slide out back in September. Okay, we bought this out in September, showing you all what was going to potentially happen over the next few months after the Fed start cutting rates. Okay, so this slide right here, everybody, this slide right here tells us something. This slide will focus on when the Fed start cutting rates, everyone. Okay, follow me closely. A lot of people that's new here, this may be going over your head, but if it's going over your head, that means you're just not where you want to be yet. You're just not there yet, but just be patient, take your time. You will get to this level because what the things that I'm telling you right now, this is how you change your life. So if this is going over your head right now, you're not understanding, don't get frustrated. Don't get upset and say this is too difficult, too hard. Just say, no, I need to dig deeper. I need to start learning this skill set so I can understand these things. Because when you understand what I'm telling you right now, everybody, your life is going to change. There has to be a point where you say enough is enough. I'm tired of playing the games with life. I don't want to play this game called life where I'm going day by day, paycheck to paycheck. I want to know more. And this is when you start understanding things like this. This is when you're going to start seeing that your life is changing because now you have the information and the knowledge that you need to change your life. Okay? All right. So right here, everybody, whenever the Feds cut rates, okay, whenever the Feds cuts rates and there's a no landing scenario, okay? Now the Feds cut rates in the middle of September, okay? So basically what this chart says, if the Feds cut rates, okay, and there's a no landing, okay? This is where we are right here, a no landing, okay? That means this happened 7 times, I believe. 1, 2, happened in January 71, October 84, October 87, June 89, July 95, September 98, and July 2019, okay? I believe that 7 times this happened, okay? And 7 out of 7 times this has happened, the stock market increased by 8.4% over the next 3 months. Look at this, everybody. Over the next 3 months. Okay? So the Feds cut rates in September. So it went into play in September. 3 months later, everybody, the stock market increased by 8%. Okay? So everybody, listen to me closely. The data said that 3 months from September, which would be December, the stock market would increase by 8%, 8.4%. That's what historical data told us. Everybody, the stock market increased by 8% in the month of December. So now it's 8 out of 8 times, okay? But now, everybody, now we're focused on this one, the 6-month forward, okay? So now, 100% of the time, everybody, not 90%, not 82%, not 70%, not 99%, 100% of the time, 6 months after the Fed start cutting rates and there's a no landing, guess what happened? The stock market increased 12.8%. 12.8%. Interesting, right? So if we look at it, the Feds cut rates in September. So September, you got what? September, October, November, December. That's 3 months. The stock market went up by 8.4%, or 8%. 3 months later would be what? January, February, March. So now the data is telling us, everybody, that by March, the stock market will be up by 12.8% from September. And we've already done all the math and everything, everybody. That 12.8% will take SPY SPY to a 625, everybody. Listen to me close. Listen closely, everybody. That would take SPY to a 625. Right now, this very moment, I believe SPY is trading around 580. SPY is trading around 580. Let me say it again for the people in the back to hear me. SPY is trading around 580. The expectation, if historical data holds true again for the 9th time, the stock market will go to SPY will go to 625 by March. Okay? Everybody with me? Sounds good? One second. Okay? So, very interesting, right? Very interesting. Okay? This is all based upon historical data. Okay? All right. So, let's keep going. Right here. Now, 12 months forward, everybody, 100% of the time, the stock market goes up by 15.8%. Okay? All right? Now, 15.8%, everybody. And this particular graph right here stated 13%. Hope you all are following me. I hope you all are following me. The data is telling us what right now, everybody? The data is telling us, calm down. It's okay. Based upon historical data, we should be up 13, 15% by the end of the year. Okay? That's what the data is saying. All right? That's what the data is saying. Okay? Let's keep going. Okay? Now, the Mag 7, everybody. Let me stop right here for a second before I keep going. Okay, everybody. Everybody okay? Y'all with me so far? Everybody good? You with me? Okay? If you with me, put a 1 in the chat. Put a 1 in the chat if you with me. Good stuff, good stuff. What I want to show you is this, everybody. The stock market is about technical analysis, it's about fundamental analysis. It's also about knowing what has happened historically. Because the market repeats itself over and over and over and over again. Okay? No one is perfect in the market. No one knows everything. But when you have something on your side saying, okay, it's an 80 or 90% chance this may happen, I would take those 80%, 90% chance that it'll happen. And then I'm going to do what? Everybody, to cover myself? I'm going to put my seatbelt on. What's my seatbelt? My seatbelt is my what? Stop loss on any play that I get into. Okay? Right now, and I'm going to get into this a little bit later. Right now, in my opinion, based upon what I'm seeing so far and based upon what I've been studying and looking into, everybody, right now is a blessing. It's a blessing for the market to be in the position that it's currently in. Okay? If you do not know how to trade stock options right now, everybody, I would do everything in my power to understand how to start investing to the stock market. Okay? All right, let's keep on going. Let's keep going. Okay. All right. Can you all see my screen now? Okay, yes. All right. The Mag 7, everybody. So we know the market, everybody. The market increased by like 20% last year, right? Great year in the market, okay? Well, actually, here we go. 23%. Perfect. The stock market increased by 23%. Okay? 23% last year in 2024. That is a great year for the market. We've had back-to-back 20%, back-to-back 20% gains in the stock market. Now, quick thing I'm going to throw in there. Historically, okay? Historically, whenever the market has back-to-back 20-plus gains, historically, the third year, the market goes down. Historically. Okay? So something else to think about as well. We got to put that in our back pocket and say, okay, historically, the stock market falls down. All right? So we got to see how much, we got to say which historical data holds the most weight. How much historical data is saying positive, how much historical data is saying negative. Okay? So S&P 500, a lot of people always ask the question, Chris, what should I be trading? What should I trade? What should I trade? What should I trade? Okay, so one thing I love to look at, everybody, is the Magnificent Seven. They call it the Mag 7. Okay, it's the top 7 stocks in the S&P 500. Okay, everyone, the S&P 500, if you don't know, the S&P 500 is an ETF. It's the 500 largest companies under one fund. Okay, under one fund. So, for example, if you invest in the S&P 500, you're going to be investing into all of these stocks right here. These are the top 8 that you will invest in. So say, for example, you want to be in NVIDIA and Apple. You can invest in the S&P 500 and you will have a percentage of NVIDIA, you will have a percentage of Apple, Meta, Microsoft, Amazon, Google, and Tesla. Okay? And plus 492 other companies, okay, that you will be investing in. It's the top 500 companies on the New York Stock Exchange. Okay? So of the Magnificent Seven, the Magnificent Seven made up 40%, okay? 40%, almost half of the S&P 500 gains, everybody. The Magnificent Seven holds a lot of weight, okay? A lot of weight. So NVIDIA was the big boy. NVIDIA increased by 171% last year, which is amazing, okay? Facebook, Meta, increased by 65% last year. All right. Apple increased by 30% last year. Apple went bananas towards the latter part of the year. Went crazy. Okay. Microsoft increased by 12%. This is something to keep an eye on, everybody. This is something to keep an eye on with Microsoft. Okay. Amazon increased by 44%. Google increased by 35%. Both of these are Google. They're basically the same thing. Okay, and Tesla increased by 62%, everyone. Okay, major moves in the Mag 7. Those are the big boys. Okay, now when I say the big boys, does not mean they're expensive. Okay, when it comes to options, everybody, there's no such thing as an expensive stock. Well, kind of, sort of, but you can get into there. You can get into any position on any stock almost when it comes to options, because you can buy different contracts. You can buy farther out the money and get a cheaper contract, okay? So you can trade any one of these particular stocks you want to, no matter how. If you have $500, you can trade either one of these, right? You don't have to have a whole bunch of money, basically what I'm trying to say, okay? All right, let's see. Okay? All right, so Tesla was a big boy as well. Okay, Tesla went crazy. But I want to focus on Microsoft for a second. Okay? Let's focus on Microsoft for 1 second. Everybody, Microsoft increased by 12%. And Microsoft's counterpart increased by, every last one of them increased by 30% or more. But Microsoft increased by 12%. Everybody, if Microsoft increased by 12% and everything else increased by 30% or more, which stock out of all of these potential stocks is at a great buying opportunity potentially? Is it Microsoft? Let's take a look at it, okay? Let's break down Microsoft right quick. Let's see what Microsoft did last year, okay? Let me pull up my screen 1 second. All right, everybody, this platform I'm using, if you're new, this platform is called Thinkorswim. Okay, this is Thinkorswim. I'm not Thinkorswim, I'm sorry. This is TradingView. Okay, my apologies, this is TradingView. All right, and we're looking at Microsoft right now. Okay, now with Microsoft, everybody, if we start January 2024, it's right here. Okay, so January 2024, the market started off somewhere around, it was at like 371. Okay, and it closed January 2024 around, where are we? Right around like a 417. Let's say 415. Okay, so it was at 371 and went to 417. Small push up. We know now a 12% push up. Okay, let's take a look and see what did Microsoft do in 2024 for the most part. For the most part, everybody, if you look at Microsoft right here, we break it down so you can actually understand it. I'm going to put a level right here. This is the lowest it was for 2024. 1 second, yeah. This was the lowest level for 2024, that yellow line, and this was the highest level for 2024. Okay, that was the lowest and the highest level for 2024. So at one point in time, the stock pushed up to 469. Okay, 469. But for the rest of the year, everybody, what did it do? It absolutely nothing. It just did. 1 second. Where's my pen? Oh, there we go. It just did what? It traded inside, up and down. Just went up and down, up and down. It consolidated side to side in 2024. But the other 6 stocks went up by 30%. Very, very interesting, okay? If we break it down a little bit further and close in our line some, watch this. We see truly, for the most part, this is what the stock did. Look at that. The stock literally just traded inside of this box. It'd go outside of the box sometimes, but it come right back inside the box for a whole year. An entire year, everybody. This is what it did. One more time. It came up, fell down, went up, fell down, went up, fell down, went up, falling down. Okay, so what are we looking for? What are we looking at when it comes to Microsoft? Okay, a break of 460 will be great, and a break of 469 will be awesome. We're looking for Microsoft to push above that 469 and come up here and take a look at this 500 price. Okay, at this 500 price. Now remember, in 2024, it increased by 12%. So I believe, not 100% sure, but if it increases by 12% again in 2025, I believe that would take the market somewhere to maybe around that 460, 470-ish. Okay, so $500 Microsoft is very possible in 2025. Okay, definitely something to look forward to. So I would definitely keep an eye on Microsoft because it was a laggard. They called it a laggard in 2024. Therefore, it's possibly some great buying opportunities inside of Microsoft in 2025. Okay, just wanted to share that with you all. Okay, all right. Definitely Robinson Hardy. It was walking. Like we said, whenever the stock market, you got to sprint. That's perfect. That was a great. I should have. Yeah, that's a perfect example. Good stuff. Watch this. Some of you all was in last night, and you learned about a sprinter and a walker. Watch this. So right here, we see Microsoft was sprinting right here. Sprint, 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 sprint. Then it started to walk right here. Walking, walking, tried to sprint. Took a breather. Walking, 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 walking. Right now, the sprinter is walking, and we're waiting to see if the sprinter is going to take off to the upside or take off to the downside. But based upon historical data, what is historical data telling us, everyone? Historical data is telling us that it's potentially going to take off where? To the upside. Okay? All right, good stuff, everybody. All right, everybody good? How do you feel? Put a 1 in the chat if you feel okay. Put a 1 in the chat if you follow. If you're following me, put a 1 in the chat. Good stuff, good stuff, good stuff, good stuff, good stuff. All right, let's keep moving on. Got a few more things to show you. Okay? Now, let me share my screen. All right, now everybody, this next chart that you see on your screen right now, this is talking about, it's called the AA net bulls, basically, right? What is this? This tells us, let me kind of put this down. It basically kind of tells us what the bulls are basically, where the bulls are, where the sellers are, and things of that nature, right? So, based upon previous data, right? Whenever this report, let me zoom out some so y'all can see it a little bit more. Okay, whenever this report is below 10, the stock market goes up. Right here it's below 10 right here. The stock market started to push up. Right here is below 10. The stock market pushed up. Right here is below 10. The stock market pushed up. But right here is below 10. The stock market pushed up. Right here it was below 10. Right, the stock market pushed up. Right here is below 10. The stock market pushed up. Everybody, right now, guess where we are? We're below 10. We're at 1.2. We're at 1.2 right now. Based upon what? Historical data. Going all the way back to April. The data tells us when it gets below 10, that means it's possibly time for it to do what? It's time for the bulls to step in and push this market back up. Do you all see this, everybody? This is basically what the data is telling us. Could the data be wrong? Absolutely, the data could be wrong. That's why we cover ourselves with a stop loss. But if I look at the VIX is rising, I know the market is falling. If I look at the 10-year yield is rising and is getting close to resistance, and that's a level where we believe that the 10-year yield could reject, and if the 10-year yield starts to fall down, stocks is going to go up, right? Then we got historical data telling us that the first 5 days of the year, if it's higher than the last day of 2024, there's a 82% chance that the stock market is going to increase by 13% this current year. Then we got another report showing us, hey, if the Feds cut rates and there's a no landing situation, 8 out of the past 8 times, the stock market has increased by 12% over the next 6 months, which will be March 2024. And we know that 12% will equal somewhere around a 625 spot. Then we got this document right here of historical data telling us, hey, whenever this AAI net bulls falls down below 10, this report falls down below 10, ever since April of 2024, the bulls start to buy back into the market and push the market back up. That's a lot of data, everybody. Wouldn't you say so? Would you not say so? That's a lot of data. Right? That's an awful lot of data telling us something. Awful lot of data telling us something right here, everybody. It's telling us to focus. It's telling us to lean in. It's telling us not to just listen to the headline news when it says the stock market is falling, the world is coming to an end. Right? Everybody's afraid. This is what the news, this is what CNBC says, this is what the headline on all the news is saying. But then you have other individuals that's doing a deeper dive. And they're saying, man, I just saw this. I just saw SPY at 609. And now it's at 580. Man, that's a great price. Because we was at 609 at one point. Guess what we're going back to? 609 again. This is a great price to buy in. That's what you have some individuals saying. And what they're doing, everything, the most valuable thing in life, everyone, is what? The most valuable thing in life is what? It's time. When the market is falling and you say, yes, I believe this is a good buying opportunity, you buy in and you give yourself time. Time. Most people think, oh, the market's running up. Let me jump in when the market's running up. You see social media going crazy. Everybody's talking about, oh yeah, crypto's going crazy, making money off crypto. Oh, everybody jump in, jump in, jump in. Everybody, when everyone is saying jump in, jump in, jump in, you should be like, hold up, wait, okay? You should say, oh, go Dr. Dre on him, or whoever said, Nate Dogg, right? Hold up, wait for a moment, okay? My cousin's nephew, girlfriend, baby daddy, baby mama, uncle, / aunt, / whatever said, get into crypto. Or get into this position because the market's going crazy. Stop, pause, freeze. Because the last thing I remember was you saying the stock market is a scam. And now you're telling me to get into it. No, everybody. The buyers buy in when the market is falling. You're buying the dip. Okay? Now the problem is, people say, okay, I'm gonna just buy the dip and hold. No, it's not just buy the dip and hold, because when you buy the dip, the market doesn't just go up. There's going to be extreme days when the market goes up, and there's going to be extreme days when that market just falls, boom, right back down, and it scares the life out of you. You have to understand now, do I buy in more? Do I sell here, take some profits? Where's my next level of resistance? Where's my next supply zone? Where's this? Where's that? Where's this? Where's that? How, if the market is falling and I'm in call positions, how can I hedge my bets? Or how can I hedge my positions? Oh, let me buy a put. I'm in a long-term call, but I see the market is falling down. Let me buy a put, short-term put. Like all of those things, right? You have to understand and know all of those things as well, okay? All right? Everybody good? Everybody okay? All right. Everybody. So right now, this is the state of the market. This is the state of the market. The market is currently falling. The market currently I think it filled the gap. Did it fill the gap? Is Joseph on? I know Joseph would know. I think it filled the gap. Let me take it off. Okay. Is Joseph, you on? Joseph, G, Uzziah, are y'all on? I think let me see. I'm looking right now. I believe the market did fill the gap. Yep, so I believe the market filled that gap that happened back when Trump was in as soon as Trump got elected, the market pushed up. It left a huge gap right there, meaning that it left a lot of buyers in that area that was not able to get into their positions. So now the market is falling back down to that area to fill that gap, and that's thank you, Greg. Yep, Greg just said it closed the gap. It filled the gap. So that whole bunch of buyers were there that needed to get their positions, get into their positions. So the market pulls back to that level. Boom, the buyers buy in. It's a potential that the market is going to push up and bounce off that area. Okay, so that's the potential. Now, everybody, still we're not out of the woods yet. Okay, we're definitely not out of the woods yet. And let's kind of pull up TradingView right quick, and we're going to break down SPY before we get out of here. I want to kind of show you what I was just talking about. Okay, Now, can the market fall down more? Absolutely, it can. Okay, the market can definitely fall down some more. And let's take a look at this and let me tell you why we believe the market will fall down some more. Okay, so right now, erase this. Boom, boom. Okay, so right now, everybody, this is what I was talking about, that gap being filled. This is what I was referring to. Okay. All right. So right here, this is when the market pushed up. You see how it pushed up and then it left all this empty space right here? That's a gap, everybody. That's what we call a gap. Empty space. That's a gap. Okay. Now with this gap, let me clear this. Boom, boom, boom. With this gap right here, it left this empty space. And the market sometimes says, hey, there's a lot of empty space right here that we need to fill. Okay, so right here, boom. The market will come back down here, okay, and fill this gap, which it did earlier today. It came down, filled this gap, and it bounced back up, because there was a lot of buyers down here that had positions that were not able to be filled when the market jumped up. Okay? So now this gap has been filled. This is one of the areas of buying opportunities. Okay? This is an area where buying is possible. Okay? Strongly, highly possible that the market could bounce from right here. But the market could continue to fall down some more, possibly about 10 more points, $10 more for SPY. So take us from that 578 possibly down here to this level right here, to this 568 mark. If SPY comes down to this 568 mark, it's a strong possibility that the 10-year yield will be at that 499 level of resistance. It's a strong possibility that you will see the VIX a little bit higher, probably approaching that $28 level again. If we come down to this 568, if SPY comes to this 568, everybody, I'm not telling you what to do, but I will definitely be fully in call options and swinging those call options. Okay, right here where we currently are, is still a great opportunity. It's 581. Where's it right now? Still a buying opportunity. Okay, but it's a strong possibility that if we come down to this 568 area, we should bounce off of it. If we do not bounce off of 568,
that's where the motherfucker hit you. It's in my post.
If we do not bounce off of 568 and we break through 568, everybody, that's definitely some trouble. Okay? So one of your levels of trouble to think about, if we break this 568 on SPY and stay beneath that 568 and kind of sit there, that's trouble. Okay? That's some trouble. We do not want to see it break beneath that 568 level. Okay? All right? So what you're looking at, couple levels. Let me erase this. Couple levels I want you to think about. Right here, we already closed the gap. That 570, right around that 576 area, we already closed that gap. So if we happen to come back tomorrow and retest this level right here, put a level right here. If we happen to come back tomorrow and retest this level, right here, that's a support level, that 576 area, basically 577. That's going to be a strong level of support for us. Okay? If we break that level, we could potentially come down here to that 568 level. Okay? So this would be one of your first levels, is 576. 577, we break 577, we could fall down here to this 568. If we break 568, everybody, we could be into some trouble going to the downside. Now, when I say trouble, I'm just saying that it's not going up, it's going down. Can we make money when the market's going down? Absolutely. Absolutely. Get in put positions. Okay? All right? You can make money to the downside with puts. All right? All right. So right now, just very, very quick high level. Where are we? We're looking to see if the market's going to stay above this 577 or break beneath 577. If we break beneath 577, we could have a trip down to 568. Getting down to that 568, we want to start holding our breath and start seeing what's going to happen at that 568 level. Okay? For me, 568 is definitely a buying opportunity with a stop loss. Okay? All right. So, everyone, that's our January state of the market. Okay? That's our January state of the market. Hopefully, everyone enjoyed the January state of the market. I know we went over a lot of data. It was more so a lot of historical data that I wanted you all to see so you can kind of know what to expect. Personally, my thoughts on 2025, everybody, I believe that SPY can go all the way probably to a 680. Somewhere probably anywhere between a 660 to a 680. Okay? Right now we're at a 580. So I believe SPY can go up 100 points. Okay? I believe SPY can go up 100 points. All right? I'm more bullish in the market than bearish. Okay? I'm more bullish than bearish. And I do believe that if we do run up to a 660, 680, it's going to happen in the first half of the year. So I believe that'll happen by June, July. Okay? This is what I'm looking at reading a lot of things of the analysts. They're expecting that the first half of the year could be greater than the second half. Okay? The second half we could, once we hit that high of that, if we get to that 660, 680, I do believe we should see 660, 680. If we get up there, we could see the market pull back for the second half of the year. Okay? All right? All right? Everybody good? Everybody okay? All right. So my expectations for SPY for 2020 is a 680 top. I believe the max will probably be a 680. If we go higher, great. Okay. But I do think we can see from the point where we are today at a 580, I think we can see a $100 push up. I do believe this could possibly happen before by the first half of the year. The second half of the year could be on the rocks, could be a lot more consolidation and some falling down. But the first half of the year is looking like it's going to be better than the second half of the year. Okay? But we're going to play it by ear. We're going to play every month by every month. Everybody that's in our program, every day by every day. Okay? Tomorrow morning, for everyone that's in the program, we will have live trading tomorrow at 9:15. Okay? Yes, you will, Sean. Yep, you will. Okay. So yes. Tomorrow morning live trading at 9:15. Everyone, we're gonna be looking to see what break down SPY and the rest of the stocks a little bit further and go into more detail before making some trades. Okay. All right. So everyone, listen. You all have a great night. Okay. You all have a great night. I will see everyone tomorrow morning, 9:15. And for everyone that's in the program, we'll see you tomorrow morning at 9:15. All right. Everyone, you have a good one. All praise to the Most High. I'll see you very, 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 very soon. Okay. Everyone that's going to be in the mastermind February the 10th, get ready. It's going to be very exciting. And you will probably be like, okay, Chris, now I understand what you're talking about. Okay. Right now you probably don't, but later on you definitely will. Okay. All right, everyone. Listen, you all have a good evening. I will see you all. I will see most of you all tomorrow morning. I'll see some of you all in February. Okay. You all have a good one. All praise to the Most High. All right, YouTube. Listen, that was my January state of the market. Well, what I do is I kind of break down the current state of the market, expectations for the next 30, 60, 90 days. And I do this on a monthly basis, okay? Monthly basis, everybody, all right? Listen, you all have a good one. All praise to the Most High. You all have a good one.